Are we at a crisis? Or some people say the crisis is just over. In today's podcast, we're going to talk about how to observe the catalyst in coming months that might trigger another new wave of crisis or eventually bring us to another recession. Alright? Watch our podcast carefully from front to back. Don't go away because you are able to pick up some tips on how to read the early signals and how to take early precautions. Don't let this coming recession or the next crisis affect your business and your family life. Stay tuned. Before the subprime crisis started to erupt over the year end of 2007, Dow Jones actually peaked in October 2007, just right before the meltdown. So likewise, when we are looking at the US Dow Jones today, the market actually peaked at the top of 39,600 points, almost at the top in February this year, before the pandemic outbreak took down the market prices. Then shortly moving into 3 months from February until now, that is May, US has lost more than 20 million jobs and US government has received more than 33 million filings of jobless benefits that is being released on every Thursday. And this has wiped out all the jobs created since the Great Depression in 1930s. And another fact and figure that we're looking at it, during the American-Vietnam War, starting from 1963 to 1977, there were a total of 58,000 plus deaths among the US Army. But today, in this coronavirus outbreak, the figure is much more higher. We have seen more than 80,000 deaths in USA among the 4 million reported cases worldwide. Well, while we are looking at the GDP figure for the first quarter of 2020 among all the major economic countries, US has reported their GDP at minus 4.8% for the first quarter, and China, being the second largest economy in the world, has reported their GDP to be at minus 9.8%, and that is the annualized rate. The Euro areas with 19 countries shrank to minus 3.8%, while UK expects the GDP for the second quarter, which is now we are in the second quarter, to slide as much as 25%. And this is really something very disastrous. And of course, when we talk about Japan, Japan GDP is expected to slide something like from minus 7% to lower for the whole of Q1 seasons. So all these, as we can see, are the unfavorable factors that might continue or erupt into a deeper crisis for year 2020. Now, next, we're going to come to this topic on how do we measure and expect another new wave of crisis coming on the second half year of 2020 or even carrying over to 2021 by observing of all these possible catalysts that might surface in coming months. So number one, when we are talking about majority people are out of job, whether it's in US, in Europe, or in Asia, there is a high chance that these house dwellers will start to default their housing payment 6 months down the road. Hence, demand for housing resale and new home sales will fall in coming months. Take note, we are talking about in the next 6 months, from now May, perhaps until November or December. If you observe any of these catalysts, that means we are going to expect another crisis coming and probably will be even more disastrous than what we are seeing here now in year 2020. Right, point number two, housing starts is likely to decline because no demand to build new house for at least the next 1 year, where people are not getting married, not looking to own new house. So housing start is another very important data to observe. And point number three, observe the orders for durable goods. If the orders for durable goods on annualized comparison keep falling continuously for the next 6 months, that means the demand for commercial equipment or transport equipment are falling, and the economy is likely to move into a deep recession. And point number 4, the 4 major commodity houses or any trading institutions, which if we look back at 2007, we have got a major government entity like Fannie Mae and Freddie Mac, and that is one of the very important and essential factor that actually trigger the whole meltdown. So for the next 6 months, if we observe any government entities or any major commodity institutions that take a plunge, so that could actually effectively trigger a crisis going into 2021 as well. Then point number 7, if any commodity houses got overly high exposures of debts, leverage, loans, and not able to pay back because of a deep plunge of crude oil prices or any commodity prices, that effectively could be another trigger point of a global crisis. All right, just like in 2007 when we see all the banks like Merrill Lynch, Citibank, who are overly exposed in selling the subprime instruments. Now, point number 8, the resurgence of pandemic virus outbreak in a second wave or any other serious act of God that is going to happen or may happen in the next 6 months could effectively widen and magnify the crisis of what we are going through now. Then point number 9, of course, the act of terrorism, and we hope that this is not going to happen. And point number 10, if there's any warfare that involves whichever majority of the world economy. For example, we do not hope there's a war outbreak anywhere from US to China to any Euro economy or to Japan, because all this will actually add on more destruction and very detrimental to the global economic growth. Then point 11, okay, we all know that all the major economic countries like US, like Europe, like Japan, they are all printing monies now to suffice and support their ailing economy. When all these countries started to print huge money in order to cater for the helicopter monies and stimulus to help all the corporations and citizens, all right, in order to fight the coronavirus. This highly expected default of repayment for sovereign debt may erupt again sometime in the year 2021 or even 2022. So sovereign debt crisis is one very important factor that we expect that it may come back and cause a big problem. Then on the last of this list, which is point number 12, all the above might happen within 6 months from now, and that means until the end of year 2020, this will effectively create another down move of Dow Jones or the China stock index or any major stock indexes that is either in Europe country or in Japan. All right, so any big falls in the stock index due to panic selling or investors' fear will effectively also cause another meltdown. So these are all the 12 points that we have summarized, all right, and you can look at the, all right, that we cater for you to take a measure and to observe in the coming months, all right. Take good caution and take this as an early signals just in case if another wave of recession or crisis are on the coming. Well, today's podcast is all about sharing on the signals and catalysts on reading the oncoming crisis, and we hope all of you will like it. Okay, drop us comments, tell us what you think, share with us your thoughts, and be our subscribers. Continue to share this podcast out to all your friends and loved ones. DW World is going to see you again. Bye-bye.